Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, we're going to be talking about angle and depth and level of retracements. A lot of you guys are taking buy setups and pullback plays and they're failing, and you're not sure why they're failing. And a lot of it is because the quality of the pullback that you're taking isn't good enough. All right, there's too much overlap on the bars on the pullback. The angle is straight down instead of on that 30 to 45 degree angle. And because of these things, you're not recognizing the real weakness that's there. You're thinking just because the stock went higher and is now pulling back, it's magically going to pivot and go back up. And some of those you'll get away with, but most of the time, if you don't have the angle of retracement, the depth of retracement, the level of retracement, as well as the overlap properly, if you don't understand it properly, those buy setups are going to fail. So we're going to talk about that today. And remember, this applies to all time frames. We're not just talking about 2 and 5 minute charts. This can be applied to monthly charts, yearly charts, 60-minute charts. So this is something for intraday traders, scalp traders, swing traders, core traders, everybody really. And also, this won't just help you with buy setups. This will also help you with breakouts, 3-bar plays as well, because again, you'll understand how a stock pulls back. How it gets to where it is very, very, very important. We're also going to throw one more little kink in there, and we're going to talk a little bit about market conditions during these depths, angles, and levels of retracement. It's a very, very powerful lecture, and I think it will help you guys make a lot more money in trading. As always, if you like these lectures, please click the like button, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is angle and quality of retracements. I thought this was an appropriate topic because we've been looking at a lot of pullback entries, a lot of buy setups and things of that nature. And I think people are missing important points to their buy setups. And when we talk about the overlap of the bar, the steepness of the angle, the tails that a bar may have, wide range bars, buying into wide range bars, market conditions during your buy setups. I mean, there are so many things to consider. And I think that's a culprit for a lot of folks when they see a setup fail and they're not sure why it failed or if they should have taken it in the first place. So we're going to try to clear up some of that stuff today and make your trades more accurate. That's all. But before we do that, we must first talk about when will the insanity stop? When will it stop? Well, this week's is impressive. I have to say, it's impressive, but not for the reasons you might think. All right, this week's is impressive because it's very positive. I'm trying to lately throw in a few more positive slides instead of the negative ones. There are a plethora of negative when will the insanity stop slides of people doing silly and foolish things. And I thought, you know what, we need to start filtering in some positivity once in a while. So maybe like 2 out of 10, something like that, 3 out of 10, I don't know, something like that. I just got this email a couple days ago. And the reason, just so you guys know that the majority of it is redacted, is because I didn't ask for permission to show this from the person. And I probably should have done that. But I got this email, I think it was Monday. Maybe it was yesterday. I don't know. It was Monday or Tuesday. Anyway, and it just says, "Hi, Jared, blah, 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 redacted. I would like your thoughts and opinions on this, blah, 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 blah." But the part in pink is what you want to focus on. This is a person who is in our chat room. This person, he is amongst you. All right. My total trading profits, including stocks and options, are currently grossing me approximately $60,000 monthly. 54 years old, again, that's in the redacted section, $60,000 a month trading. So this is a when will the insanity stop positive, right? Addition, so to speak. So I'm very proud of this person. They know who they are. I'm not going to out their name. If they give me permission to do so later, I will. But right now, I think it's better I don't. But for those of you out there thinking, oh yeah, trading is so tough and this and that with trading. This person's making over 700 grand a year doing this between stocks and options. Yes, it's going to rain soon. Pigs are going to come out of the sky on Mall. Yes, well done to this particular person. Like I said, I'd like to personally give you credit, but I didn't ask you for permission to put this out there. So $60,000 a month trading stocks and options. What's the point? It means if this person can do it, so can you. It's possible. All right. So don't give up on the business. Just give it the time that it needs and that it deserves, because it is a very, very, very challenging business. It's super challenging. It's one of the hardest, if not the hardest things you might ever do. But the good news is it is actually rather simple. It's just hard because of the mental game for the most part for people. But yes, so congratulations to this person. Well done. And I'm sure you're not finished yet. I'm sure your next goal will be to hit $1 million a year trading. All right, so that is the insanity this week. Now we're going to talk about levels of retracement. So I talked a little bit about this topic, maybe 2 years ago. It's been a while, and I've added some new slides to this, some current trades that we've taken. And this particular slide is actually pretty much out of professional trading strategies. So we talk about different levels of retracement. Now remember, guys, this is a multifaceted lecture. We're not just going to talk about levels. We're going to talk about angle of retracement as well. We're going to also talk about wide range bars, buying into them, etc. So there's about 4 things we're going to talk about. This is just one of those 4 things. Anyway, you have a stock here. It goes from $18 up to $20. Okay, so had a little pullback and then just ripped. All right. So when this stock pulls back, we generally consider the 50% area to be ideal, that 40 to 60. Why? Because, nothing's exact. It's a range. So 40 to 60%, we call it 50% retracement, is the ideal retracement. Okay, so then the question becomes why? Why is 50% ideal, right? Why isn't 25% better? Why is 100% not as good? So let's talk about that for a minute or two. I don't want to spend a whole lot of time on this, but if we talk about the 25% level, and I bring this up because there's a lot of traders right here. This is where I'm talking about. There are a lot of traders that look at pullbacks and buy setups that are very shallow. I mean, this happens every day in the chat room. And they go, Jared, what do you think about this? What do you think about this? And I say, I don't like it. It hasn't pulled back enough. And they look at you like, dude, why would I want it to pull back more? Isn't a further, deeper pullback a sign of weakness? Yes and no. In this particular case, no. But we'll get to that in a minute, the yes side. All right. I need you to think of things like this. Look, nothing goes up in perpetuity. Nothing goes up. Even Tesla stock does pull back, right? So the question you have to ask yourself is when a stock goes from 18 to 20, that's a pretty significant move, yes? Okay. So if you pull back 10, 20, 30%, in this case, say 25% right to here, the problem is the stock hasn't rested long enough yet after such a significant move. Right? So I always use this analogy, and if some of you have heard it before, I apologize, but it's a good one. It's like saying, hey, I just ran a 2-hour and 10-minute marathon. Okay, great. That's a wonderful marathon. That represents moving from $18 to $20. That's the marathon. Okay? Now I'm going to give you 1 day's rest, and then I'm going to say, hey, I need you to do it again. What? So I just won the marathon on Sunday, and now on Monday or Tuesday, you're saying, yeah, I need you to do it again. What are the odds that you're going to be in optimal condition to run that marathon? What are the odds you're going to be able to run back-to-back 2-hour and 10-minute marathons? Slim to none. Why? Because your body needs recovery time. Right? You're not a robot. Neither are stocks. Okay, so yes, there will absolutely be occasions where stocks pull back 10 or 20% and rip. I want to repeat this because, again, we're going off of technicals and we're going off of what happens most of the time, not the exception to the rule, what happens most of the time. So if a stock pulls back 20 or 30% and rips, you'll be like, see, Jared, I told you. That's not the norm.
Most of the time when they have a shallow pullback, they bounce and then they fail. They may even retest the high and then they fail. Okay, another reason for a 25% pullback that is not ideal is the risk to reward to the prior pivot high first target area is not ideal, right? Most of the time, if you have a very shallow pullback, the risk to reward is less than 1-to-1. I don't want 1-to-1 for my first target. I want 2-to-1 for my first target. So when you look at a shallow pullback like 25%, it has not rested long enough, and the risk to reward is generally not good enough. So now let's flip the script and say, okay, well then, what about 100% retracement, right? So if 25 is too shallow, 50 is ideal, 100 is too big. Well, why? What's the thought process there? You're like, well, geez, Jared, if the marathon runner had plenty of time to rest at 50% and not enough time to rest at 25%, well, then the obvious comment at 100 is it's had too much time. Is there such a thing? Yes, right? Rest is rust if it's too long. Okay, so now the marathon runner is rested so long that they've gotten fat and they're not in optimal conditions. Let me relate this to the chart. You see, when a stock goes deeper and deeper and deeper, 70%, 80%, 90%, what is actually happening here? Buyers are telling you we are not committed. This is what this means. The deeper a stock pulls back, it's telling you that sellers are in control and buyers lack interest in buying this stock. So the obvious question you need to ask yourself is, why? Why don't these people want to pick this up? I mean, if 50% is ideal, isn't it better to get a 60% retracement? The stock is cheaper. I'm picking it up on the cheap. But then you got to ask yourself, why are you picking it up on the cheap? Right? What's that, that saying, it's too good to be true? If it sounds too good to be true, it usually is. Well, same here. So you have to ask yourself, why is there a lack of interest from the buyers? Well, we don't necessarily care so much as to why. We just know that there is, right? So if a stock pulls back 100%, now you got to ask yourself, if this stock was so strong from 18 to 20, why did it need to pull back 100% before buyers were willing to buy it up again? They clearly don't think this is a good value. Therefore, they want a cheaper and cheaper and cheaper and cheaper price before they're willing to step in, right? So in their opinion, this is a riskier bet, a riskier proposition. Therefore, they're not willing to pay all the money for it. They're only willing to pay a very small amount of money. They're not willing to pay a premium. Therefore, there's lack of commitment here. When there's lack of commitment, we're not interested. Okay, so can you buy at 100% retracement? Yes, you can. But the expectation changes. When you buy at 100% retracement, the expectation is a 50% pop. You are not expecting a 100% move back up. It can happen. It's possible. We're just not expecting it. Okay, you're likely going to see a 25 to 50% move. Then it's going to chop around, and maybe it goes higher, maybe it goes lower. So, in summary, because I've spent quite a long time on this slide, 25% is too shallow, it hasn't rested enough, and the risk to reward isn't that good. 50% is ideal, it shows just enough resting period, just enough commitment from the buyer stepping up the right area, and the risk to reward is usually pretty solid. 100% shows a lack of interest, a lack of commitment from the buyers, and we're not expecting a 100% move all the way back to 20 in this case, maybe a move back to 19. Okay, so let's move along. Angle and quality of retracements, do they matter? Well, we just talked about level and depth of retracement. We didn't actually talk about angle and quality. That was level and depth. So let's take a look at that as well. So retracement levels, guys, are used to measure the strength or weakness of a move. We just covered this, right? They help us determine if the current trend will continue or likely reverse. The level of retracement helps us determine this. It also helps us determine the odds of success or failure. So I'm basically repeating what we talked about on that 50%, 25%, 100% slide. In short, retracement levels help keep our expectations in check. They also help keep us objective. So given the prior pivot compared to the current pullback, we can surmise what might likely happen next. What about the quality and the angle? And this is what's very important. So level and depth is just one aspect. Angle and quality are going to be the next two aspects that we talk about. Okay, so the steepness and angle of retracement determines the demand. In an uptrend, the steeper the retracement, the lower the demand, unless it's climactic. Think about it. It makes total sense. The steeper the retracement means what? Sellers are piling in. If you're in an uptrend and you see a wide range red bar pullback, that means buyers are nowhere to be found. You see, when you see that 45-degree angle, what's happening? Buyers and sellers are fighting it out. Sellers are slightly winning, right? They're winning, but they're not overwhelmingly winning. When a bar just drops straight down, there are no buyers to be found. It's all about selling pressure. Well, why would you want to buy into an area where it's all about selling pressure? Unless it's climactic and the sellers do what? They outsell themselves, right? They oversell themselves. That's the whole point of a climactic. A stock is oversold. That's climactic. But we're not talking about climactics. We're talking about buy setups. Okay, so you don't want to buy into a wide range bar, and the angle of that retracement matters. So buy setups after steep or significant retracement angles have lower odds of working. They fail more often. All right, substantial change in the angle or of direction often ends a move. All right, so the angle of an ideal retracement is roughly 30 to 45 degrees. Okay, think about that. It should be that nice sequential kind of cut back like that. All right, sequential lower highs and lower lows. Substantially overlapping bars are not ideal. 20 to 30% overlap or less is ideal. Don't worry, you'll see some examples. Okay, quality pullbacks are tight, not overlapping, nor are they whippy. They are more predictable and thus more reliable. Okay, so you know what I'm talking about. You don't want those complete overlapping bars. You want that sequential pullback, right, where you're seeing 30%, maximum 50% overlap, maximum 50% overlap. Okay, so we're going to take a look at a couple things here on this slide. Angle is the first thing we're going to take. Overlap, we'll take a look at on the next slide. Angle is what we're focused on this slide. All right, so note, we have a stock that kind of breaks out right here, puts in 4 big time green bars, goes sideways back towards the rising moving average, right? This is a nice breakout. Why? Because we can see the stock was in a downtrend, but it's finally put in its first higher high, okay? It got far away from the moving average. The moving average tends to act like a magnet, so it consolidated back towards it, doesn't have to touch it, but it did so in a bullish manner because it put in a higher high, and it didn't pull back. So we have 2 types of pullbacks, right? We have our corrections, a correction through price, correction through time. This is a time correction, and then it rips and goes higher. Now, the safest place on the chart, we've talked about this in other lectures, the safest place on the chart is to buy the first pullback after a breakout. So this stock breaks out, here's your first pullback, very safe. Now remember, we're not talking about the overlap here. We're talking about the angle. So note, the angle is about 45 degrees towards the moving average, near support, bounces. Note, the angle is similar, about 45 degrees, okay? Not quite to support. Support would be over here where my cursor is, right about there. So it doesn't pull back to support. The level and depth of retracement here is not 50%. It's probably in that 30-35% range. So again, some concern. But the angle is what we're after on this slide. I want to be clear about it. Don't worry. On slides past this, we'll put it all together. But we're just talking about angles of retracement here. But now as we start to move up here and here, especially this last one, note the angle here. Right? It says the pink lines look like they could flip over, which means the stock also looks like it could flip over, i.e. change trend. You do not want this type of angle or this level of angle. It's too steep. What almost always happens here, listen to this, pay attention. What almost always happens is someone says, Jared, look at, it's near 100% retracement. It's got to bounce. Right, the angle, which means if the angle is so steep, sellers they have to be exhausted. No, they don't have to be. What happens? Almost always. This stock will trigger. It will bounce up about 30% right into where my cursor is, right there. Okay? And then it will tank. It will bounce up 30, maybe even 50% if you're lucky, and then it will roll over. Happens all the time. It especially happens on gap downs that bully, and you want to take the first buy setup. And then they pop shallow, and then they roll over. Okay, my point here, though, in this is, notice as the angle gets steeper, so do the pullbacks, right? So the pullback angle, you can see the pink line. It almost looks like the stock is about to what? Transition from a stage 2 uptrend into a possible V-top stage 3, and then potentially into a stage 4. You can even start to see the moving average rollover. So these are not the types of angles you want. Okay, you want a 40 to 60% retracement. You want it at or near support or the moving average. Okay, how it gets there matters, but the angle is very, very important. Again, one aspect. We'll revisit this, don't worry. So now, quality of pullback. Now we're going to talk about overlap. So we've talked about level of retracement, 50%. We've talked about angle of retracement, 30 to 40%, 30 to 45%. Now we're going to talk about quality of pullback. Okay, so now take a look on the left, take a look on the right. The overlap into prior bars should be minimal. Okay, 20 to 30%, not 50%. Now I'll be honest, 50% is the maximum. That's okay. You can have a 50%, and that's okay. You don't want to see 60, 70, 80%. So if you'll notice on the left-hand side here, we have a stock going up, 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 and then note the pullback. This pullback has very little overlap. Again, some overlap is okay. These have virtually no overlap, but some overlap is okay. That's a very smooth move up. It's a very sequential smooth move down, and then the move back up is typically also smooth. If you move over here, the move up, the initial move up was nice. But what happens here? You have a significant overlap. Then this bar gets gapped on, taken out. Then significant overlap, then significant overlap. And significant overlap causes problems. What you're seeing here is a tug of war, right? Buyers and sellers are fighting it out. And now, taking this, say you want to try to take a buy setup over here. Now you have to deal with all of this congestion to the left, right? Fighting occurred here, fighting occurred here, fighting occurred here. And you want to buy into all of that fighting? No, you don't. So this is a much less reliable setup. This is a setup where you're going to need it to retest the high of the day, right? And then look for an alternative entry, maybe a breakout. But you do not want to buy into overlapping slop, square tops, double tops, those types of things. So the overlap is very important, okay? So let's take a look at this chart. Now, is this perfect? No, this is not an ideal buy setup on the left. But what I want you to look at is a real chart, okay, where on this particular part of the pullback, you don't have a lot of overlap. Here, there's a little bit. But now take a look over here, okay, right here where my cursor is, right there, okay. Look at the level of this overlap, right? It's just 100%, 100%, 100%, 100%. Even down here, so much overlap. Now, this stock ultimately did move higher, right? And it sliced through some of it, but this is not typically what you want to buy into, all right? And then eventually this thing just gave it up. You want to try to buy the smoother pullbacks, okay? Not these overlappy pullbacks. You don't want to buy into fights, all right? So let's take a look. This is really what you're looking for, okay? This is a stock that's clearly in an uptrend. It breaks out, right? Moves above this 3730 area relatively smoothly. There's some overlap, but very strong. And then note the pullback. Note the lack of overlap on the pullback. Note where it's pulling back to, just above this green line, just above the moving average. Okay, so remember, guys, for those of you who've taken professional trading strategy, we have 3 location items. Those location items are level of retracement, 50%, rising moving average, and minor price support, right? So in this case, what do we have? A pullback to the rising moving average, check, that's good, right? If you take the top of the pivot right here, 3780-ish, down to here, 3710, that's roughly a 50% retracement, good. Okay, it's a little bit above minor price support, but close. So you kind of have 2 to 3, 2.5, so to speak. All right, but we also have a sequential pullback, not a lot of overlap. Risk to reward is decent, right? You're going to get in at perhaps 37.50 with a 10-cent stop, room to 37.80. That's a 3-to-1 risk to reward. Guys, make sure you're taking clean buy setups. Don't manufacture a trade that doesn't exist. Okay? Make sure you're getting a decent pullback. And I am not, see, one of the issues I'm also seeing, this a little off topic, but on topic, that I'm also seeing from you guys is that you're taking in professional trading strategy, you know how it says 2 or more lower highs? You're literally taking 2 stocks that have, like, you call this little red bar right there a lower high. You'll see a bar like that and a bar just like that. 2 bars in a row. Oh, Jared, it has 2 lower highs. It's a buy setup. No, it's not. Okay? There are other things to factor into when you're looking at buy setups, like angle of retracement, like depth of retracement, like the overlap on the bars. But I'm literally seeing you guys, a bar that has literally 2 lower highs by a couple pennies, and you're like, it's a buy setup. No, there's more to it than that. Make sure they're clean and pretty. Take a picture of this, put it on your wall, and every time you go to take a buy setup, make sure it looks that good. Make sure it looks that good. And maybe show a little bit of relative strength, a little bit of relative weakness to the market. That would be nice, wouldn't it? Okay? Save yourself some trouble. All right, so now, here's a stock, again, breaking out with a wide range bar. Lower high, lower high, lower high. Note, take the high of the pivot, take the low of the pivot. Where are we at? We are at a 50% retracement. We are at minor price support. If this had like a 9 or 20 period moving average, it would probably be very close. This is a 200 period, okay? You get a change of color bar, a bottoming tail bar. You buy here, stop here, first target here. Note the second one, okay? The overlap here is a lot, but these next 3 bars, very little overlap, okay? You're at about a 40% retracement, minor price support, little bottoming tail, narrow body bar, first target, next high, rips. But now you get this. You get a steep retracement angle, wide range red bar. You don't want to buy it right here. Yes, guys, it has a lower high, a lower high, a lower high, and a lower high. And it's in an uptrend. So for the very basic traders out there, the people that are just brand new and don't know much, you're going to sit there and go, well, it's got multiple lower highs. It's in an uptrend. Oh, and by the way, it looks like it's bouncing off some support. Check, check, check. This is a terrible buy setup. Okay? It's not the worst I've ever seen, but it's not the best. All right, so you're not going to buy it down here. Now, having said that, after it consolidates over here at 35, it becomes a much more palpable trade. It becomes more of a breakout. But you are not going to buy right above this green bar here after a wide range red bar. This is not an ideal situation. You want the stock to prove itself. You want to know, are buyers really committed? Because sellers certainly look like they're committed. All right. So bottoming tail doji bar, bottoming tail doji bar, bottoming tail bar. Maybe you could buy it at 35, but you don't have great risk to reward. It ultimately moves up, pulls back, and again, look at the level of retracement, the angle of retracement. Okay, it's straight down. It's not 45 degrees. There's a tug of war going on. Okay, buy setup triggers, not by much, couple pennies, and then fails. This is not an ideal situation because of the angle and depth of retracement here, okay? Then chops around and then kind of breaks out of nowhere. Now, why am I showing you this part over here to the right? Some of you go, see, it ultimately worked, Jared. Yeah, but it didn't work with a pattern. It worked with 100% retracement. It worked with a sloppy pullback. We're not interested in that. Guys, technical analysis, the reason we have stop losses is because not every trade works. So just because you see something unusual that works that shouldn't work doesn't mean that you should take it next time. So when you see this go from $30 to $50, that doesn't mean that, oh, next time you're just going to buy it at $30. No, that's still a bad trade, right? Bad trades work too. Good trades fail. Keep that in mind. Bad trades work. Good trades fail sometimes, but we're going with the odds, okay? This is the last chart you saw, same, but I blew it up. I wanted you to see the quality of these retracements. This is what you're after. Pick a stock that's either transitioning like this one is, right? This stock is going from what looks to be a stage 1 into an early stage 2. So this first buy setup is really a transitionary buy setup, right? Because you only have one higher high, and you do have one higher low. So a higher high and a higher low. This is your second higher low and your second higher high. Now, this buy setup is in an early uptrend, an early stage 2 uptrend. Guys, remember the first pullback after a breakout is one of the safest areas on the chart to buy. This is a great buy setup. This is a phenomenal buy setup. These are the kind you want to focus on. All right. Look familiar to anybody? Snowflake. So what do we have? Note, real quick, we'll assume the daily chart is nice. We'll just make that assumption just for lecture purposes. For learning purposes, we'll assume the daily is nice. Okay. So this stock ripped, right? I mean, it ripped. Pulls back. Note, the overlap is 50% or less. Lower high, lower high, lower high, lower high. So again, the overlap was nice. The angle of retracement, nice. Okay, 50% retracement. Let's throw in angle of retracement. Okay, good. Overlap is nice. Okay. All right. So, boom. What we got going on here? I mean, uptrend, check. 50% retracement, check. Bottoming tail, check. Narrow body bar, check. Near the moving average, not shown, but if you had a 20 MA, it's sitting on it, check. Good risk to reward, right? Reward to risk. That's what RR means, reward to risk, check. Angle of retracement, good, check. Overlap was nice, check. Sign me up, man. Back the truck up, bring in the bars of gold. Yeah, a little reduced volume on the pullback right in there. You know, sitting there going, Jared, I took PTS, my brother. Don't tell me I'm wrong on this one. I got my checklist right in front of me. I'm going check, 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 check. I've gone over PTS 14 times now. Don't tell me about this one. I can't wait to email this one to Jared. Cannot wait. I'm gonna stump him on this bad boy. So far, this thing looks good. Strange though. Same idea on Snow. Love the buy setup, but don't trust the market. If a market moves up, Snow will be a nice long. Just a lucky comment, perhaps. What happens? This is the same buy setup we just saw 2 slides ago. This is the same market, but the market was tough yesterday, right? We saw a lot of overlap on this pullback. See this big red bar? See this topping tail? So when you see this little bottoming tail on the SPY, I'm not expecting a new high because the quality of retracement on the SPY was crap. It had a shallow retracement that failed. So it actually had a failed buy setup earlier with a wide range red bar followed by a topping tail bar followed by another red bar. They trigger roughly at the same time, right? Peekaboos you in right there. See it? Ooh, how beautiful. Peekaboo, peekaboo, stop, stop. You must account for the market. On this day, what was important about this? Not only was this pullback on the SPY sloppy, the markets were up nearly 1.5%, right? The Qs were up even more than the SPY, right? So I picked the SPY because this is a New York stock, so it's more correlated to the SPY. Guys, the markets were up 1 to 1.5%, and you get a sloppy pullback on the SPY. That's a tough play. It's a tough play. Even though it had a lot of the goods. It really did. It had a lot of the goods. But if you check or fail to check what the market's up to, you're going to have a tough time as a trader all the time. All right? So, let's do this one more time. Net. The question is, should you check the Qs or the SPY, DM? Well, use some common sense, and I'm not trying to be rude by saying that. I'm not being rude. If it's a New York stock, check the SPY. If it's a NASDAQ stock, check the Qs, because the Qs are the NASDAQ 100. I have them both up all the time. I have the Qs and the SPY up. Most of the time, they trade similarly, but every once in a while, there will be a divergence. But if I'm trading Microsoft, or if I'm trading Tesla or something like that, I'm probably going to look at the Qs more than the SPY, right? But I look at both of them. All right, so net, same day. So what do we have? Well, it's in an uptrend. 50% retracement from the high to the low. It's pretty close. Minor price support near a moving average not shown. Good risk to reward. I mean, let's do it again. Angle of retracement. Okay. Overlap is good. Do it again. My goodness. Check, 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 check. Trigger's right here. You're looking at it. And let's be fair. It's a pretty nice buy setup. Let's not kid ourselves. It's pretty nice. Okay? The overlap there was a little more than you might want to see. But again, all in all, generally speaking, pretty nice buy setup. What's the safest area on the chart to buy? The first pullback after a breakout. Not bad. All right. Here it is. Net. Nice 5-minute buy setup over 1665. But the market is tough here. And you're going to need the market for this to go higher. I said this 4 minutes before we did the snow trade. This was 4 minutes before the snow. The market is tough here. And you're going to need the market for this to go higher. Sure as shit. The market didn't go higher for the same reasons. Sloppy overlap, and it was up nearly 1 to 1.5%. Stock triggers you in, stops you out, bounces a little, and still goes lower later. Okay? So despite having everything in check and everything in order, you still need to look at the market. You could have great relative strength, and maybe that would be the one exception. Maybe. We saw it today on NVIDIA. NVIDIA had a 2-minute buy setup that was decent. The market rolled, NVIDIA rolled over. What happened 10 minutes later? The market ripped, NVIDIA shot the moon. Guys, so many stocks are correlated to the market. You need to pay attention to it. All right, so maybe I'm just lucky. Snow and net, was the exact concern. Market lower, and it drug both stocks down. Happy I held off, hashtag. Right? Happy I held off. It's not worth it. If I had a higher level of confidence in the market moving higher, then we probably would have taken one of those two trades. But I didn't have a high level of confidence in the market. You don't have to trade. I'll repeat it. You don't have to trade. But you want to trade, don't you? It's like that need versus want thing. Right? You don't have to trade, but you want to trade. That FOMO. Because what if that trade worked? Now all this, I knew I shoulda, woulda, coulda. Shoulda, woulda, coulda. Okay? Guys, this works the same for downtrends. I know we focus a lot on uptrends, but level and depth of retracement, overlap, okay? This is a nice, smooth, controlled move lower. Smooth pullbacks, not much overlap, angle of retracement. Note on the bounces on a lot of these, they're at minor price resistance. They're at the moving average, 50% retracements. This is what a nice downtrend looks like. This stock put in a double bottom, looked like it was going to go higher. It really did, especially with this green engulfing bar. That may have been an interesting breakout at 39.60, and then it rolled over it. And once it got below 39.20, that was it. That was it. Once it broke there, it's timber. Make sure they're clean, pretty trends. Okay? Now, how about this? Clean and controlled. Here's a stock that gapped up, had a shallow pullback, ripped, and pulled back. Now, some of you might get caught up in that red bar, and I could see it, but generally speaking, this was a nice move up, and this is not a big, wide range red bar. It's just a little narrow range resting red bar. So while I get it, some of you are going to hang your hat on that little red dot, overall, there is more good on this chart than there is bad, right? Green bar, green bar, green bar, green bar, little red bar, green bar, green bar. Note the overlap on the green bars going up is very nice. Note the overlap on the pullback is very nice. Note you don't have one, but you have two green bars at the bottom at the rising moving average on a 50% retracement at minor price support. My goodness, check, 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 check. Bottoming tails, narrow body bars, change of color bars. First target, prior pivot high, then it continues up. This is an example of a nice buy setup. 49.60 is the entry, 49.40 is the stop loss. First target's at 50.10 area. Guess what? That's about 2.5 to 1, and then it continues higher. These are the types of buy setups that you want to focus on. The angle of the pullback is pretty good, right? The level and depth of the retracement is good, the angles, etc., and so forth. So this is really what you want to be focused on, okay? Now, I put this out here with question marks. Good buy setup, good buy setup, good buy setup. What do you guys think? This stock went from $8 to $34. What do you guys think about this? First one, good buy setup. So Felix answered all three, said no, no, yes. Okay. All right. Most people are saying the first one is not a good buy setup, and you would be right. And here's the problem real quick. Here's the problem with some of you saying, but that's a wedge. It is a wedge. It's just not a bullish wedge. And this one actually has a higher high, right? Yes, it pulled back to the moving average. Yes, it's near support, but this is very tough to buy into. What you want to see here is actually this wide range green bar go to 14 and then consolidate out, right? This is really not an ideal scenario. Okay, yes, I know it went higher. Why do you think I put this chart on here? Because I want to show you that there are plenty of charts that go higher without having good patterns. But some of you are going to look at it and go, FOMO, 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 FOMO. Gosh, I wish I would have taken that. Why? Just because it went higher? Look, if you get FOMO for every stock that goes higher that doesn't have a pattern, you're going to have a lot of FOMO in life. That's not our job, right? It's kind of like in sports. Right? You do your job. If someone beats you, you clap your hand and say, nice shot. That's it. If you make the right play at the right time and someone just makes a better play, nice job. That's the way you have to look at this. Okay? If some stock just shoots up with no pattern, say, good for you. But that's not in my plan. Right? So there's nothing here on the first one. The second one, you have lower high, lower high. Guess what? By the definition of the book, it's a buy setup, right? Two lower highs in an uptrend, but it's garbage, right? It's garbage. But it's got two lower highs in an uptrend. That's what a new trader would say to this, okay? Then it bounces up and pulls back, and of all the buy setups, this is the nicest. However, it's really not that good. You know, it's got about a 50% retracement. It's not at minor support. It is at a moving average, right? Does have a doji bar, but it's not that good, right? There is a lot of overlap and slop. Maybe over here, 24, it's a little better, but it's not that good, right? So these are the ones that you have to sit back and just kind of, all right, I'm going to hold off. And guys, I know it's hard. It's like looking at that VERU yesterday. You're sitting there watching a stock go from $6 to $15 and you're going, why am I not in this? Wait, because it didn't give you a pattern. That's why. Move on. That's it. Just move along. Don't get upset over it. It's going to happen tomorrow. It happens every day in the market. If you get caught up in that stuff, it's like arguing with somebody online on Twitter. If you get caught up in that shit, that's a Pandora's box you don't want to go into, right? Arguing with a bunch of trolls on the internet. It's like trading. If you get caught up in FOMO over bad setups that end up going higher, and then the next time you take that bad setup, it's not going to work for you, all right? So don't get caught up in it. If it's not good, it's not good. There's nothing wrong with that. Guess what? You're going to come across a lot more bad setups than good setups. It's just life. So, retracement summary. Common reasons trades fail. Trading poor quality trends, trading without a trend, trading against the trend, trading against the market. Right? These are kind of like the biggest reasons that trades or traders, either way, fail. High quality trends are tight and controlled with little overlap. Low quality trends are often whippy, spready, have a lot of overlapping bars, and are hard to predict. Stay away from them. Okay? To be a good trader, you have to be able to accurately define trends and then have the patience and discipline to only trade the high quality, more predictable trends. That last part is the challenge, right? This happens. Now remember, there's a lot of things that come together in trading. And one of the things that makes traders kind of lose their stuff is when they take two good trades. Say you took two really good buy setups and they both failed. It happens. Now you're down 2R, you're upset, you're watching everyone in the chat room make money, and you're like, why am I the only loser that didn't make money today? Everyone else seems to be making money. I took two good trades. So what do? You lower your expectation, right? You lower your quality. And then you go take a third trade that's garbage, and that one fails too. And you shouldn't have taken it. Whereas you should be more objective and say, hey, the first two trades were good. I didn't do anything wrong. It just didn't work today. There's nothing wrong with that. It's going to happen, right? So that's the mental aspect of it, which we're not going to get into today. But you can see where things can snowball and get out of control. When you start trading properly and every once in a while it's not working, maybe you tend to go outside of your plan or go outside of your checklist. And when you do that, you're just asking for trouble. So that mindfulness in trading is very important, all right? But before you get to the psychological aspects, fix the technical stuff. Have a pre-trade checklist. Know exactly what you want to trade. Make sure the quality of the retracement is correct. Make sure the angle of the retracement is correct. Make sure the level and depth of the retracement is correct. All right? Do what you can do. Once you take it, it's out of your control. Right? Once you've taken the trade, it's out of your control. Okay? Oh, that was the last slide. Whew! Well, look at that. I didn't even realize we're on the last slide. So I hope that you guys learned a little bit about quality of trends, angle of retracements, overlapping bars, also locations of where you should be taking these, and do not forget about the market. We didn't talk about relative strength and relative weakness today. That's for another time. But never, ever, ever, ever forget about the market as well. You can have the most beautiful pattern in the world. If the market shits the bed, that pattern's not going to do very well. All right, so I hope you learned a little bit to make your trading better, more accurate, and more profitable. I am Jared Wesley of Live Traders. We'll get back at it again next week.